This is the Daily Market Comment by Rafi Boyetian. I'm Maria Pashordavis. Thanks for joining us at XM.com. The US dollar is recovering from one-month lows on Monday, having deepened its latest slide on Friday following the mixed readings on the labor market. The US economy added far fewer jobs than anticipated in August, but the unemployment rate nevertheless dropped to a new post-pandemic low of 5.2%, while wage growth accelerated. The overall take from the NFP numbers was that the Federal Reserve will likely intensify taper discussions in September, but not reach a decision until its November meeting. However, whilst the moves in FX markets indicated a big adjustment to Fed taper expectations, bond markets signaled otherwise. The yield on 10-year Treasury notes whipsawed on the back of Friday's data. The ISM non-manufacturing PMI fell in August compared to July, but remained elevated. More importantly, the employment and new orders sub-indices were little changed, suggesting the NFP miss was likely a blip. U.S. markets are closed today due to the Labor Day holiday, but Wall Street futures are inching higher, taking their cues from Asia following a mixed finish to last week. Stocks in China and Japan surged on Monday, lifting the mood globally. China's CSI 300 index closed up 1.9% after authorities announced plans for a new stock exchange and tried to allay fears of further regulatory crackdowns by reinforcing its support for private enterprises. In Japan, meanwhile, local equities extended their gains following Prime Minister Suga's surprise resignation on Friday, on hopes that Suga's successor will push for more fiscal spending and have better success in bringing the latest outbreak of the coronavirus under control. Central banks will be dominating the agenda this week, with investors bracing for possible tapering by the European Central Bank on Thursday. ECB policymakers have stepped up their hawkish rhetoric lately, as the Eurozone recovery has made substantial progress during the summer. Expectations that the ECB might slow its bond purchases as early as this week have been aiding the euro's rebound versus the greenback over the past couple of weeks. The Australian dollar is facing some downside risks heading into Tuesday's policy meeting by the Reserve Bank of Australia. Prolonged lockdowns in many parts of Australia could force a policy U-turn by the RBA. The Aussie is today's worst performer, following an impressive bounce back from August's 9-month trough. This was today's Daily Market Comment. Thanks for joining us at XM.com.